Eric Muade, November 25th, 2013. Just before the market opens here, 1 hour to go, we see the futures called up with the Dow up about 60 points. S&P 500 called up about 5 points, which is just moving it to fresh all-time highs. The Nasdaq also. Overnight in Asia, we see that the biggest mover was Japan, up 1.54. Right now we are looking at Europe, pretty much to the positive, very nice gain there. And if we take a look at commodities, pre-market action, we see that gold is down about $15, and we see that crude oil is also down 1.3. So that's how it looks like. Silver is also down 1%. So it seems like big moves overnight for the commodities. So for this week, before I show you the charts, let me remind you that I have a webinar coming up. So go to www.marketfire.com and click on the free webinars link, and you're going to come to 2 webinars. I have a webinar set for Tuesday, which is tomorrow, and that's going to be November 26th right here, and it's going to be discussing how to use the MACD correctly. So that I can get that, how to use the MACD correctly to time mega moves. So we're going to be discussing the kind of things you want to be looking for whenever you want to position yourself to be able to own some of the best moving stocks or some of the best moving markets. So just click on the reserve seat. You can see that there's limited space, so go ahead and take advantage of that free webinar tomorrow, Tuesday 26th. So let's go to the charts. The level to watch on the Nasdaq weekly is 39.43. Why? Because this is the highest closing high before this breakout. So if the market can hold above that, that's very positive for the market. As far as the Dow is concerned, you can see the Dow is way above its buy point. So the Dow can even correct this week and still stay above its buy point on a weekly closing basis of 15,658. So anything below this could suggest a failed breakout. For now, seems very healthy to the upside. As far as the S&P 500 weekly is concerned, you can see S&P 500 has had a nice breakout above this previous weekly closing high here of 1709, and since that breakout you can see it stayed above this for the last 1, 2, 3, 4, 6 weeks. So it looks very healthy. All it needs to do is stay above 1709, and this is going to be a healthy breakout. Of course, down the road, if we break below that 1709, that could be a sign of a market that is on pullback mode. On the daily, we can take note of the fact that it has a fresh daily closing high that broke out to new highs, and so the level we need to watch is 1798.18, which is this previous daily closing high. If the market can hold above that on a daily chart, that's a continuation of the breakout. If it stalls back below that level, that's a failed daily breakout. Could also confirm negative divergence here as far as the RSI is concerned. For now, the market looks healthy, but if the S&P 500 cracks back below 1798, and also if this negative divergence is confirmed, then maybe we've seen short-term highs, and the next thing is for this market to pull back. Eric Muade, good luck, peace, and blessings.